welcome to this episode of Deep Dive by NewsX. I am Devika Devan. Today we're talking about a quiet revolution in the world of commodities, one that is happening right in your locker or jewelry box. For decades, viewers, silver was the humble poor man's gold. But as we wrap up 2025, that nickname has been permanently retired. Silver hasn't just stepped out of gold's shadow, it has sprinted past it. While gold is traditionally the hedge against inflation, silver has become something much more potent, the essential fuel for the future economy. Today, silver is trading in India at approximately rupees 2,40,000 per kilogram. To put that into perspective, just yesterday the price was hovering around 2,58,000 before a minor correction. But look at the trajectory. Only a week ago, we were at rupees 2,22,000. Exactly 1 year ago, silver was languishing below rupees 90,000. We're now looking at a staggering 150% return in a single year. It is quite simply the best performing major asset at this point. But why is the world suddenly scrambling for this metal? To understand the prices, we have to look at a global production crisis. According to the World Silver Survey 2025, global production has hit a wall. This year, the world produced roughly 25,000 metric tons, but that isn't nearly enough. To put that into context, India itself alone needs about 8,000 to 10,000 tons. We are currently in our fifth consecutive year of a massive supply deficit. Essentially, the world is using silver much faster than miners can dig it up. In the mining industry, silver is rarely the main event. Nearly 70% of silver is actually a byproduct of mining for copper, lead and zinc. This means that even with Indian prices crossing the lakh rupee mark, mining companies can't simply produce more silver overnight. They have to wait for the demand for industrial base metals to rise before silver can be extracted. When we map out where this supply comes from, the concentration is quite startling. Mexico remains the undisputed heavyweight champion, producing nearly 24% of the world's silver. The Penasquito mine and the operations of the Fresnillo are the pulse of the global market. China and Peru are neck to neck, each contributing about 13%, roughly 108 million ounces each. They're followed by Chile at 6% and Poland at 5%. But here's where the problem arises. Even in these mining heartlands, the grade of the silver ore is dropping. Miners are having to process more rock to get the same amount of metal, making the entire process more expensive and slower. In Peru, social unrest and aging infrastructure has caused production to dip by nearly 3.5% this year. While in China, older miners are beginning to see their reserves deplete. The world is relying on fewer and deeper mines to satisfy this exploding appetite for silver. However, extracting the ore is only half the battle. The real power lies in refining it into 99.9% pure bars that we see in the Indian bullion markets. China has effectively become the world's refinery. It processes an estimated 60 to 70% of all global silver, and they have been able to build an infrastructure that the rest of the world simply cannot match up to right now. Russia and Poland also hold significant refining capacity, particularly through European giants like KGHM. For us in India, this is a point of concern. Because the majority of refining happens in China, any trade friction or export restrictions there send immediate shockwaves to our local markets in Zaveri Bazaar or Chandni Chowk. When the refiner controls the tap, the buyer, which is often India, has to pay a premium. This now brings us to the question, who is buying all this silver? The answer, of course, starts at home. India is the world's largest consumer of physical silver, and this year we've broken every record. Between April and October 2025, according to industry analysis, Indian silver imports surged by 67%, reaching over 4,600 tons. As gold became unaffordable for the middle class, the Indian retail investor pivoted en masse to silver. But we aren't alone. China is purchasing massive quantities, not for jewelry, but for its industrial machine. The United States follows closely, driven by a surge in safe haven buying by institutional investors who are nervous about the global economy. More interestingly, for the first time in decades, central banks are showing interest. The Russian central bank recently signaled it would include silver in its state reserves, a move that rather treats silver as a strategic currency asset rather than just a commodity. The real engine behind this price surge, however, is modern technology. If you drive an electric vehicle or have a solar panel installed on your rooftop, you are a silver consumer. The solar power industry is now the single largest driver for the demand globally. This sector now consumes 29% of all industrial silver. As countries race toward net zero, the demand for silver paste has grown by over 150% since 2019. Then, of course, there's the EV sector. A standard petrol car uses 15 to 28 grams of silver. A battery-powered EV requires up to 50 grams. By 2027, EVs are expected to overtake traditional cars as the primary driver of automotive silver demand. Add the explosion of artificial intelligence, which requires heavy silver semiconductors. There has been a 5,000% increase in IT power demand since the year 2000, and every single one of those servers and chips requires silver-coated contacts to function. And why am I telling you all of this? It's because perhaps it's time for us to look at this metal differently. Where does India stand and what should India do is the big question that we take forward with Dr. Jayajit Bhattacharya, President of CDERP, with us. Dr. Bhattacharya, interesting day right before we sip into 2026. We've all woken up to big news. The prices of silver did come down from the record high, but they're still quite high. But beyond the price, Dr. Bhattacharya, there is an aspect of it. There's a Chinese aspect to it. There will be certain regulations that will be imposed by China starting the 1st of January 2026. I want to understand from your perspective and assessment, how does India protect itself?
Yeah, since you mentioned the Chinese aspect, there is a historical context to it where the Chinese economy was completely disrupted because China was banking on the silver metal to protect its wealth. But when silver started flowing in from the new world, which is the Americas, it completely damaged the then economy of China. Now, coming to the present world, clearly India is a minuscule producer of silver, but is turning out to be a massive consumer of silver, thanks to the cultural roots, thanks to the fact that in terms of or in times of uncertainty, people start investing into gold and silver, and because of the rising electronics industry in this India, where Apple itself produced $20 billion worth of iPhones, and along with it, there are the solar panels and all other kinds of electronics and EVs that you mentioned. Now, one of the reasons why people are investing into silver is because traditionally the gold is to silver price used to be about 80 is to 1. Right now it has fallen down to 65 is to 1. So it's actually a good time to buy silver because the price of gold also shot up quite significantly. And therefore, there is a renewed interest in terms of the investors to start investing into silver. As that ratio starts going back to 80 is to 1, there will be a mellowdown in the demand of silver, which is what we are saying. There's about a 1% reduction in the demand of silver as we speak because of the prices really going up. From an Indian perspective, we need to ensure that there is more mines discovered, there is more mining of silver happening. We haven't invested enough in finding new deposits of silver, and that clearly is one of the ways forward because purely from a industrial perspective, we need silver. There is no option to it. The second would be to go out and find mines elsewhere in the world, possibly Latin America or other places, where we can start mining and putting up our own industrial processing for silver so that we have a supply chain resilience of silver. Because silver is no more merely a jewelry item or an investment protection item. It is an industrial item, which means that it will impact how India's growth happens, how the GDP gets continues to grow or not grow. Silver will play an important role because electronics is an important part of today's modern economy, and silver powers that economy. And hence we need to find alternate sources of silver, have long-term contracts put into place, just like what we did with oil and what we're trying to do with lithium. We need to do the same with silver, and then make sure we have our own refining capacities for silver. And that's really the only way to make sure that we don't get shocks from other entities and other global players such as China that you just now mentioned. And that's something we need to take up with great alacrity.
Yes, Dr. Bhattacharya, at the same time, you've just mentioned that we'll have to figure out our own infrastructure for silver, but that's going to take some time. As you mentioned, we've not really invested in that infrastructure. India continues to import silver, and the fact that silver is not even, as I've just mentioned, it's not really primarily what is mined. It's actually a byproduct of mining for all the other metals that we've also discussed. So I really just want to understand from you, not from really a domestic jewelry perspective, but to keep our EV sector, which is booming, and also our solar sector. I know that there's a major push on solar as far as India is concerned. We've created the Global Solar Alliance. So obviously we want to be a leader there, but silver is an important metal. So do you think that the way forward really will be to maybe start finding other areas that you mentioned, and also for some of our industry giants to then have direct contracts with some of these countries?
No, absolutely, yes. In fact, there's also been some setbacks in the Indian industrial ecosystem in terms of copper mines not being allowed to go forward. And if the copper mines had been put into place, we would have had silver as a byproduct, as you rightly pointed out. So those are setbacks that have happened. Those are getting rectified as we speak, and hence we will see some light at the end of the day from those initiatives that are going on. In addition, we can't, as you rightly said, cannot overnight set up some of these refining capacities. But what we can actually do is buy up some of these refining capacities which are elsewhere, and some of them may face problems, may face headwinds, and we need to be in the lookout for a buying opportunity of silver. Also, in the longer term, just like we have a gold reserve, we also have a silver reserve, but that's not good enough. And therefore, can we invest into a much larger silver reserve so that we protect our industries from the silver price shock? Because some of these prices, in fact, not just prices, but the supply of silver can be weaponized to actually challenge some of our industries, especially in areas which are modern industry, which is electronics, EV, and so on and so forth. And also we should keep in mind that 50% of the renewable energy that India set up, 50% is solar, which means that much amount of silver will get consumed for producing those solar panels, or we need to end up importing the solar panels from elsewhere, which again puts us in a different kind of a sovereignty challenge, because again solar panels can be stopped from being supplied to India, which is not a position we want to be in. And therefore, silver is something we need to invest in, both in terms of a strategic reserve as well as ensuring that we control some of the mines. Just like we need to do the same for barytes, we need to do the same for polysilica to
Yes.
ingots manufacturing, and so on and so forth, which also would need silver at the end of the day.
And at the same time, Dr. Bhattacharya, one aspect that of course comes to mind is also recycling silver from certain, for example, old electronics. So there's industrial scrap, there is old solar panels. That's also something that we don't yet have the capacity for. It's actually very difficult to recycle silver once it's already been used. So maybe that's a problem right there for any entrepreneurs watching this, any minds out there, Indian minds watching this, to actually work into and maybe solve for the future. Because at the end of the day, Dr. Bhattacharya, a huge part of it would also then come back to recycling, right?
Absolutely. There are two parts of the problem in terms of recycling. One is collection of material which has got silver embedded in it, and the second part is the ability to recycle. And as you rightly said, silver and other rare earth metals, including gold, there's been a challenge in trying to get them out of e-waste and other such materials. But perhaps investing into research and technology to find out better technologies to extract silver and other minerals from e-waste and other kinds of waste will be worthwhile. And along with it, a very strong institutional mechanism to extract this waste. Many of us simply throw away our phones or give it to a channel where there's no visibility, wherein it goes in for smelting by little kids in some slums. I think those are again areas which needs to be strengthened so that there is a proper collection of the e-waste and then sent to industries which can then extract the relevant minerals from it and metals from it, including silver.
Right, absolutely. Thank you so much, Dr. Bhattacharya, for joining us on the broadcast with that perspective. With our viewers, a very short break.